Hello students, welcome to Accounting Explained at Account-Wise Academy. This is Latha Venkateshwaran. In today's topic, we are going to see Introduction to Capital Budgeting. Now let us see the meaning of capital budgeting. So the term capital budgeting refers to the long-term planning. Okay, it's a long-term planning for proposed capital outlays or expenditure. So it is for capital expenditure. What is a capital expenditure? We can call an expenditure as a capital expenditure when the money is spent by a firm to acquire assets or to improve the quality of existing ones, and the benefit of which goes beyond a year. Then that expenditure is called a capital expenditure for the purpose of maximizing return on investment. So the proposed capital expenditure is an investment here, and that should be, when you're going to invest in that capital expenditure, it should be of maximizing return. So this investment should give us more return. Okay. Capital expenditure may be cost of mechanization, automation and replacement. So what is mechanization? When we are using machineries instead of humans, it is called as mechanization. Automation is when you use computers instead of humans, then it is automation. Replacement, you all know, replacement of an existing asset. Okay, so all these expenses, cost of mechanization, automation and replacement, is a capital expenditure, and the planning for it is capital budgeting. Okay, then cost of acquisition of fixed assets, even acquiring fixed assets like land, building and machinery are also capital expenditure. Investment on research and development, usually the investment which we make on research and development will be of huge amount. Okay, and the benefit the benefit of which we can see it only after a long time. For example, 3 years, 4 years or 5 years, and it goes on. So investment on research and development is also a capital expenditure. Cost of development and expansion of existing and new projects. For example, you are running a factory. Okay, if you are going to expand your existing factory, then it's a capital expenditure. Or if you are going to set up a new factory in some other area, that is also a capital expenditure. Now let us see the definition of capital budgeting. Capital budgeting evaluates long-term investments in fixed assets. So it is, capital budgeting is a capital expenditure. So it is a long-term investment in fixed assets. So capital expenditure is an expenditure which we are going to incur today, and the benefit of incurring that expenditure or buying that fixed asset goes beyond a year. Okay, like buildings, machinery over a year, considering both funding and utilization. So both funding and utilization goes beyond a year. Okay, it is also known as investment decision making or planning capital expenditure. These are the other names for capital budgeting. Now, Charles T. Horngren defines capital budgeting as long-term planning process for financing and making this capital expenditure. He says it is a long-term planning process for financing and for making this capital expenditure. In simpler terms, businesses use it to decide which capital projects to pursue. We saw previously, right? Like to set up a factory or to expand a factory. So they will decide upon that. Both are capital expenditure, but both cannot be done simultaneously. Either you can expand your existing factory or you can set up a new factory. Okay, and here the ultimate goal is to maximize return. So whichever is going to give us more return, we are going to go with it. Okay, that is capital budgeting. This is what Charles T. Horngren defined capital budgeting as. Next, John Hampton highlights Capital budgeting involves evaluating various capital projects. See, same thing. He also tells evaluating various capital projects. As we took as an example, what did we take? Whether to expand or to set up a new factory. To identify those, what did we identify? To expand or to set up a new factory with the highest potential return on investment. Same thing is telling, see there he says maximize return, and here John Hampton says it is highest potential, that gives highest potential return on investment. Importance of capital budgeting. Capital budgeting decisions involve long-term implication for the firm and influence its risk complexion. So capital budgeting is expenditure on capital items. Okay. So capital expenditure is nothing but the benefit of that expenditure goes beyond a year. So capital budgeting involves long-term implication for the firm and influence its risk complexion. If you are going to invest in some capital expenditure, what are all the risks you are going to face in the business? Okay. Next, capital budgeting involves commitment of large amount of funds. It's a capital expenditure. Obviously, it will have a investment of large amount of funds. Capital decisions are required to assessment of future events which are uncertain. So what are the future events which we considered? We thought of maximizing returns, or we want to maximize returns in the future from that investment. So always future is uncertain, right? So capital expenditure decisions, though we want to maximize returns and we find out that we will maximize return in the future, but that is uncertain. In most cases, capital budgeting decisions are irreversible. Today, you have spent something on buying a fixed asset or a machinery, okay? But if you feel that machinery is not of good use to your business, that expenditure which you have spent is irreversible. You cannot do anything. Already you have spent, you cannot do anything. This is because it's very difficult to find a market for the capital good. Okay, for example, you buy a very costly phone. Okay, so you find it, you are not satisfied with the phone after a month's time. If you want to resell the phone, will you be able to resell at the same cost or the same price for which you have bought? No. So it's very difficult to find a market for the capital goods. So similarly, you bought a machinery. You find it that is not good for your business. It's not possible to find a market for it after a month's time with the same amount. What can you do now? The only alternative available is to scrap the asset and to incur heavy losses. Capital budgeting ensures the selection of right source of finance at the right time. So if you want to go ahead with the project, you should get the right source of finance at the right time for the project to take off. Many firms fail because they have too much or too little capital equipment. Investment decision taken by individual concern is of national importance, like employment, economic activities, and economic growth. Objectives of capital budgeting: to ensure selection of the possible profitable capital projects. So we have to select only the capital projects that is going to give us the most possible profitable return. To ensure effective control of capital expenditure in order to achieve by forecasting the long-term financial requirements. So we should have an effective control of capital expenditure and the long-term financial requirements which we need because of incurring that capital expenditure should also be forecasted before taking that project. To make estimation of capital expenditure during the budget period. All companies prepare budget. So they have to give provision in the budget about this or have provision for this capital expenditure, and they have to estimate that capital expenditure in the budget and to see that the benefits and costs, that is called as cost benefit analysis, should be done properly by the company, and it should be measured in terms of cash flow. Determining the required quantum takes place as per authorization and sanctions. So the required capital expenditure should take place as per the authorization and sanctions given by the higher authorities of the company. To facilitate coordination of interdepartmental project funds among the competing capital projects. For example, let us take a car manufacturing company. One department goes for mechanization of machinery and other department goes for automation. So there should be coordination between these departments, okay? And this interdepartmental project funds where mechanization and automation take place among the competing capital projects. There should be coordination even if we are going to take 2 capital projects at a time to ensure maximization of profit by allocating the available invested amount. With the invested amount in the capital project, there should be maximization of profit. Then only it's a profitable capital expenditure or a capital project. Principles or factors of capital budgeting decisions. A careful estimate of the amount to be invested. So we have to make a careful estimate of the amount to be invested. We saw during the budget period itself we have to make the estimate of that capital expenditure. We have to set a provision for that capital expenditure. Creative search for profitable opportunities. For example, if we are going to set up a new factory, we have to see, because of setting up the new factory, how much our profit or sales is going to be increased, and because of that, how much profit is going to be increased. So that creative search should be made. A careful estimate of revenues to be earned and cost to be incurred in future in respect of the project under consideration. It's not only enough if you make the careful estimate of the capital expenditure. We should also make a careful estimate of revenues to be earned and costs to be incurred from that project under consideration. A listing and consideration of non-monetary factors influencing the decisions. So here non-monetary factors we can say customer satisfaction, competitive advantage because of that capital expenditure, environmental impact that capital expenditure has on the environment, and social responsibility. These are all some of the non-monetary factors that influence the decisions. Evaluation of various proposals in order of priority. For example, if you have many proposals like automation, mechanization, setting up a factory and setting up of a new factory and expanding the existing department. These are all the capital projects which you are going to do. We have to prioritize those projects like 1, 2, 3, 4, and according to the priority list, we have to go with the investment or go with the projects. Proposals should be controlled in order to avoid costly delays and cost overruns. The proposals which we make for capital projects, they should be controlled and they have to avoid costly delays. Since it is a capital expenditure, any delay occurring will be of very costly in nature. And cost overruns. The cost we have estimated, it should be more or less equal to the actual cost. Evaluation of actual results against those budgeted. So the results which we have incurred actually should be compared with the budgeted ones, estimated ones rather. Care should be taken to think all the implication of long range capital investment. This capital investment which we make is a long term investment. So care should be taken to see the implication of this long term investment and working capital requirement. Working capital is nothing but the capital that a company uses to finance its day-to-day operations, and it is nothing but current assets minus current liabilities. So long-term assets is capital expenditure, okay, and short-term assets less than a year, and liabilities whose debt which we are going to pay within a year, they are called as current liabilities and current assets. It should recognize the fact that bigger benefits are preferable to smaller ones. We should have more benefits. We should not go for the projects which are going to give you smaller benefits. And early benefits are preferable to later benefits. Suppose if you are going to get the benefit from that project only after 2 years, 3 years, compared to another project where the benefits you start to see within a 6 months period. You have to go with the project or proposal that gives early benefits. With this, we are going to finish the Introduction to Capital Budgeting Part 1 lessons. Do like our video and share it with your friends if you find it helpful. Subscribe to our channel, which will encourage us to make more videos like this one. If you would like to inquire about the accountancy classes which I take, or to get more worksheets for problems with solutions, contact us at acct.wiseacademy@gmail.com. Thank you for watching.